Disclaimer, boys and girls, read that right now. Trading is risky business. Alright, it's time to revisit this, boys and girls. A lot of you have been asking for me to come back and revisit the ICT 2022 model. This is the model that's gotten me funded. It's gotten me funded every single time and is my bread and butter setup. It's what I trade my personal funds with, consistently get wins with, and as much as I got bored of it, it is super reliable. It's the one I've been calling old reliable on stream, and it's what I'm back to trading on stream now as well. So good time to make a revisit video. This is going to simplify it down and show you exactly what I trade, what I look for when I'm on stream, the key levels I look for, conditions I need for entry, etc, etc. So we'll run through it. I'll run through the theory of it first with you, and then we'll look at the live example, and hopefully that helps you be able to understand the model and to see it for yourself as well. Now, of course, credit to ICT. He's the one I learned this from. These are all his concepts. This is his stuff. I've just become quite good with it. So here I am, simplifying it in my own words and helping to spread this knowledge to the rest of you. But as always recommend going to watch his original playlist as well. So if you look here, this is the gist of what I'm looking for. I will annotate this, we'll go into it in more detail, but basically, first of all, I'm looking for price to come and sweep a key level. Okay, so I've got that marked out in blue. The blue there represents a key level sweep. So you're expecting price to come up to an area that you have predetermined on the charts. Then you're anticipating price to come up, sweep that level, trade right into it, and then have a market structure shift. So once we have that low there broken, you have that market structure shift down here. What I'm then doing after that market structure shift is confirmed, I'm looking for a fair value gap within this price leg. I like to personally take the fair value gaps closer to current price so I can guarantee an entry. So I look for that gap, get my entry in that gap on a retracement, and I have my stop loss at the swing high. At the swing high that swept the key level. Get my entry in there, and then I ride down. I take profit one at the low hanging objective, which is when price comes down and trades through that leg. I take my first bit of profit, which is half of the position typically, and then I let the rest ride until we reach another key level of some sort. So I will run through this with you guys, break it down, but this is the gist of it. So looking for price to trade into a key level, sweep above, break down, tap into a fair value gap, take first profit at an easy low objective, and then let the rest of the profit ride to the next target or until market reverses. So let's break this down a little further. So here's the rules that I follow with the model. This is like my checklist. So I'm waiting for, like we said, sweep of a key level. I'll run into what key levels are next, but I have a video on that which I will link. What a sweep zone is, as I like to call it. So there's certain levels I look for. I'll quickly run through it in this video too. So once we've got that sweep, market structure shift, fair value gap entry, take profit one at that low hanging objective, take profit two until market reversal or opposing key level met. Again, I'll show you live examples. Now here's an important part, is I only will take an entry within these time slots. If there's a setup that forms outside of these time zones, it's less reliable. So I typically, this is my main one, 1 p.m. to 3 p.m. So if I don't get an entry by 3 p.m., then I don't take a trade for this model on the day. Same as before. If it's before 1 p.m., I don't take a trade. Same with London, 3 a.m. Eastern time and 4 a.m. between the hour is the only time I'll take a setup. And if I traded the morning session, which I don't, but I'd only be looking between 8 a.m. and 11 a.m. Eastern time to take my entry. Now, that's not to say your trade should be closed by these times, but just your entry typically should be within that zone, within that time window. If your trade doesn't run to full target by this time, I typically just hold it over that time frame until take profit two is hit, or even take profit one sometimes. So using this checklist here, let's go onto the charts and I'll show you a live example of what this is. And so you can see a real live execution. All this theory means nothing without live execution. So I'll take an example from this week. This week I've gone 6 sessions in a row winning streak with the model. They're quite trustworthy setups. So I'll show you one of the good setups from this week, and we'll take this checklist here and I'll show you this live, and we'll tick it off as each condition is met so you can see what this looks like for real. And when I say sweep zones, these are the key levels I'm looking for. Previous week's high-low, previous day's high-low, previous session high-low, Asian range high low, equal high lows, and sometimes, I should add in here as well, sometimes lunch hour high low. So those are the key levels that I look for. So back here on the model checklist, when it says sweep of key level liquidity, I have these zones marked out on my chart every single day, and I look for a sweep at these levels before continuing. So again, let's look at a live example of this. Makes more sense when you see it live. Let's break it down. So here's the live replay of the trade I took this week. This one was a textbook setup. So what I have outlined here in the orange box is the Asian range high and low. So from 7 p.m. to 12 a.m. Eastern time, that's the Asian range. I mark it out with a box. You got the high and the low. And here at 3 a.m., we had price come down, sweep the low. So we traded down below the Asian range low, came down below, and then we start to trade up. And what I'm waiting for here is for this high here to be broken. So once this swing high here is broken, we've got that sweep of a key level below. Then once this high breaks, that becomes a market structure shift. So checking the second condition of a trade. Boom. So there you go. Market structure shift confirms my bullish bias after that sweep of the low. So once it's traded above that swing high, I'm then waiting for price to drop back down into a fair value gap. So like I said, I like to take fair value gaps that are higher up so I can catch the position. You have to make sure you have your stop loss at the bottom of the leg that swept the key area first, though, because of course many other gaps can be created in that leg up. So I'm about to enter in here, get my entrance off that higher fair value gap, and I'm going to have my stop loss down here at the swing low. There we are. I've entered in one contract there at the fair value gap, and I put my stop loss in at the swing low that swept the key level, key zone sweep. Stop loss is put in there, entered one contract in the higher fair value gap, and I'm about to scale in here. I add in a second one as we trade down a little bit deeper into that fair value gap. And as we traded down a little bit lower, I end up getting in another contract in this. Because I take the higher fair value gap entry, as long as I can handle the risk of the stop loss there, I tend to add more to my position as it trades down a little bit deeper into that displacement leg. So I add in a third contract there, adjust my sell stop, my stop loss to 3 contracts, and then I let it ride up. Now, in this particular one, I didn't follow my own rules of taking take profit 1 at the first low-hanging objective. I went in and targeted my take profit objective with standard deviations. I don't typically do this. I can get into this on another video, but in this case, I use standard deviations because the take profit target was a little bit too small for the risk I was taking on with this position. But I was confident in the bullish bias. So price traded up. I took off the majority of my position at that standard deviation target, and I let the final one ride up to the end. And my opposing target there was the previous day's high. So as it ran up towards that high, I trailed my stop up above break even to secure profit in case there was any crazy whipsaw back to the downside. As we got closer and closer to my ultimate target, which is that opposing key level, I trailed that stop right behind it. As we got up there and exceeded the level, I trail my stop loss right behind the active price movement and then catch it out right there. So that's the completion of the whole process. You got your sweep below that key level, Asian range lows, market structure shift on this candle, market structure shift to the upside, fair value gap entry, and ride that up to my target. So it really is beautiful when it plays out. It's like a piece of art. It's like an orchestra put together nicely. When it plays out, it's beautiful. This model, I call it the old reliable for a reason, because when you've got your draw on liquidity right, which comes with experience and chart time, it's a very comforting and confident trade. Like often when I get in a position for this model, I'm not very worried about my stop loss getting hit unless I've got something wrong or unless market conditions are choppy. But in any other case, this is a very confidence-inducing model. As much as I didn't want it to be, it still is my favorite model. I tried to crack the high-frequency scalping. It's been up and down for me, and I always just come back to the ICT 2022 model. I haven't found anything that's been able to reliably and consistently beat this. And this is what I've been trading live on stream. Had a fantastic winning streak so far this week. First losing day today, choppy conditions, but made a bit back in the afternoon session. And yeah, that's how I trade the ICT 2022 model. Now, in terms of time frame analysis, what I like to do is I like to frame my trades. First of all, I look at the weekly chart to determine the weekly bias. Then I drop down to the daily chart, have a look where we're sitting on the daily. Then I drop down from there to the 1 hour. This is where I do my intraday analysis. 1 hour, 15-minute, and the 5-minute. And then I typically execute my trades over on the 1-minute chart. So what I'm doing on the weekly chart is just getting a feel for order flow. What kind of trend are we in? An uptrend, downtrend? Same thing on the daily chart. Are we in uptrend, downtrend? Is there any fair value gaps on the daily chart we could possibly react to soon? Once I've got kind of a higher time frame bias, I drop down to the 1 hour, 15-minute, 5-minute. Look for any fair value gaps and market structure points that I could see as potentially reacting to or drawing towards or pushing away from. I use the 15-minute chart to frame up my fair value gaps that I want to be looking at trading towards and away from. And then the 5-minute and the 1-minute chart to look at their market structure and execution for my trades. So typically, ICT said in the 2022 mentorship that you want to frame most of your trades based off 3 time frames, depending on what you do. If you're an intraday trader, 1 hour, 15, and 5 is a good one to kind of get a nice intraday trade from. So that's the basics. That's the gist of it. It's very simple. I suppose the hardest part is learning the context and price, getting good at determining what the draw on price is, where price is most likely to head, getting good at determining bias. That stuff, in my opinion, is hard to teach. It comes with time and experience and chart time. Put in the work, put in the hours, and take what's ours, boys. And just learn from the charts. Start to get a sixth sense feeling for where price is going to head towards. You know, you subconsciously recognize certain patterns and it just gets easier and easier over time. But yeah, that's literally it. This is what I'm trading. I use this checklist and then these levels to look for and anticipate sweeps and reversals. It's been almost 2 years of me trading this model. It's what, number one, got me funded. Number two, has kept me consistent. I've been profitable every single month on my personal accounts. And here I am now back to trading it again on the Top Step accounts. After being stupid and blowing my 150K funded account, trying to take high frequency scalps against all of my rules, blowing it out, and yeah, here I am, sticking with Old Reliable. The thing with this too, guys, is you'll probably get, I typically find, probably about 3 good trades per week in my session. It's likely you'll find one trade during your trading session, chosen trading session as well. I normally find about 3 good ones for the week. So you're not in there, hammering away setups every single day. It's very selective. And you can't trade unless these conditions here are met as well. So it's also good at kind of keeping you off the charts when there's nothing there. So yeah, that's the gist of it, guys. I hope that helped. Hope that makes sense. Obviously, if you want to see it in action and continue to learn this model and see it happening live just to help it cement it in your mind, this is what I'm trading every single day live on stream, 1 p.m. Eastern time, Monday to Friday, and 3 a.m. Eastern time, Tuesday Thursday at the moment. So check it out. Other than that, guys, take care. See you next time.